Hello and welcome to the Tuesday, March 3rd, 2020 edition of Tesla Daily, unofficial Tesla podcast. My name is Rob Maurer. Today we are talking about the new high price target on the street for Tesla stock, the macro environment, and then some news on China as well as the BMW i4. Tesla stock today had a strong open but did fall throughout the day with the macro environment, but did close in the green, finishing up 0.25% to $745.51, compared to the Nasdaq, which fell throughout the day, down 3%. That decline was despite the Federal Reserve announcing today that they will be cutting interest rates by 0.5%. Remember I said yesterday the next Fed meeting wasn't until mid-March, so this early rate cut makes this an emergency rate cut, the first time that we have seen that action since the 2008 recession, and it's also the largest rate cut since that same period. Generally, it's 0.25 percentage point at a time. But as we can see with the macro environment the last 2 days, wildly up on Monday, down pretty significantly today. The move seems to have been expected since Monday, based on the Goldman Sachs note that mentioned both of those things, the half-point cut and the early cut, as strong possibilities. About the cut, Fed Chairman Jerome Powell said, quote, "The virus and measures being taken to contain it will weigh on economic activity here and abroad for some time." Continuing with, quote, "A rate cut will not reduce the rate of infection. It won't fix a broken supply chain. We get that, but we do believe that our action will provide a meaningful boost to the economy." End quote. In Tesla's case, with the macro environment being tough, it wouldn't have been shocking to see the stock down 5-10%. That seems to have been the case lately. But on the day today, Tesla was boosted by an analyst setting a new high price target on the street of $1,060, with JMP Securities' Joseph Osha upgrading the stock from market perform to market outperform. Osha has been pretty successful with his ratings as an analyst, and I'm only really discussing this because I know if I don't, people are going to comment with it. But on TipRanks, which rates and ranks analysts based on their price targets, Osha is rated as the 572nd most successful analyst out of about 6,000 in general. So relatively highly ranked with a 60% success rate on those price targets and a 12% average return per rating. The reason I don't really care too much about those things is because I think fundamentally Wall Street gets a lot of things wrong. So an analyst could be bullish and the stock could go way, way down. We've seen this with Tesla in the past. And even if the analyst is 100% correct in their research and thesis, the market simply may not recognize that. And I don't think an analyst should be dinged for the market failing to understand things. Putting myself in their shoes, I probably would have looked like a pretty terrible analyst from the period of time 2015 to 2019. And then the last few months, I would have looked like the best analyst ever. So yeah, in general, I'm not going to give an analyst more credibility based on a good TipRanks ranking, and I'm not going to take away credibility just based on a bad TipRanks ranking. Sure, maybe at the extreme end of the spectrums, and maybe if this analyst has a really, really long history of ratings, then maybe that rating history is somewhat valuable, but in general, I would just prefer to look at the actual research and thoughts that they're putting forward. So let's take a look at just that. Osha says, quote, "The recent market-driven pullback provides investors with a good opportunity to enter the stock in our opinion, and a perusal of offerings from competitors suggests that Tesla's market position should continue to be dominant." End quote. At that $1,060 price target, that would put Tesla just shy of a $200 billion market cap. Osha says, quote, "Second, we also argue that the $198 billion market capitalization implied by our price target does not seem unreasonable if one considers the potential for Tesla to be a 1.8 million unit company by 2025. That is more than 3 times our forecasted 2020 volume. Tesla requires no additional market share gains to get to that number, and our analysis already assumes that most of the Chinese market is inaccessible to Tesla." End quote. Okay, so 1.8 million units by 2025. This is why I said in my conversation with Gally a couple weeks back that it's incredibly easy to make a case for Tesla's current valuation. At the time, I think it was in the 800s or something like that, just based on their core auto business with not really all that aggressive assumptions. This is the highest price target on the street at $1,060. It's about 40% above where the stock price trades at today, and they appear to be forecasting 1.8 million units for 2025. Now, I don't have their full note, so I can't see their assumptions on things like margins and average selling prices that do make a difference. But speaking to the unit forecast, 1.8 million units should be pretty easily achieved with the combination of Gigafactories Nevada, Shanghai, and Berlin. Construction for Gigafactory Nevada started in January 2015, so 5 years ago. So in the last 5 years, we've gone from Gigafactories literally not even existing, not being a thing yet, to having 2 that are in production and a third that is breaking ground likely this month, each of which has a planned capacity of 500,000 units or more. So I guess over the next 5 years, we're just expecting Tesla to call it quits with those 3 and just, stop growing. I don't think that's a forecast I would want to make personally. Tesla could double that and do 3.6 million in 2025, and I would be not at all surprised. That'd be about a 46% compound annual growth rate from today. 1.8 million is about 30%. This is why when people keep asking me if this is a bubble for Tesla, I continue to say no, this is a fundamental repricing. Yeah, things could fall dramatically from here. And yeah, there's always other things involved like the macro environment, short interest, hedging. But just because it can fall and just because it might fall doesn't mean that it necessarily should fall. And that brings me right back to the analyst conversations. I mean, people have said that Tesla was overvalued in 2013 and 2014. Even with the benefit of hindsight, people still say that. But if you look at those periods of time and you had bought Tesla, you got a really good return. And I'm not sure exactly where it's at right now versus the general market. But I know at least recently, if you set the graph of Tesla next to the graph of the S&P 500, and you picked any individual day, any specific time, if you bought Tesla instead of buying the S&P 500, no matter when it was, you outperformed the S&P 500. So yeah, maybe it'll take Tesla 3 years to get through $1,000 per share. Maybe it'll take 3 weeks, who knows? But the point is, when you look back in 5 years, my bet is that even if you bought at $969 per share, and even if we don't come back to that level for a long time and people say that was overvalued and it was a bubble, well, I bet you can look back at that and say, it still outperformed the S&P 500. Anyway, end of rant there. Let's move on to the rest of the news with some coming out of China today. It appears that Tesla has been shipping some made-in-China Model 3s without the new full self-driving hardware, despite the fact that on the vehicle report, the part number indicated the newer hardware. So this was first brought up on Weibo, with some customers reportedly sharing their concern to the Chinese government as well. So basically, instead of hardware 3.0, some customers were getting the hardware 2.5. Pandaily.com covered this story, and according to them, Tesla has released a statement in response to this issue, apparently saying that the downgraded hardware was due to, quote, problems in supply chain, end quote, saying, quote, hardware 2.5 and hardware 3.0 are virtually the same for owners who did not purchase additional full self-driving service. We have installed the latest hardware 3.0 for all users that have purchased full self-driving, end quote. Pandaily.com also reports that Tesla has promised to provide a free retrofit for all the made-in-China Model 3s that are in this situation, quote, as production capacity and supply chains recover, end quote. So definitely disappointing news here, not so much in the fact that some vehicles are getting the hardware 2.5, but more so in the fact that Tesla didn't communicate that up front. Clearly the actual difference in hardware is not a big deal if you don't have the full self-driving package. I think the only real difference is some visualization things at this point. But doing something like this without properly communicating it, assuming it was not properly communicated, it's always tough to get accurate information out of China. So I don't want to make accusations off assumptions there. But from the information that we have, it doesn't seem like it was. So if that is the case, things like that are a great way to lose the trust of your customer base, which you really don't need when you've just entered a new production market. Overall, a pretty minor situation. Obviously, the retrofitability makes this pretty easy to resolve. And actually a really good move from Tesla to keep production going in the face of constraints on hardware 3, but you also need to tell your customers. So hopefully Tesla will take a lesson away from this. Next up today, we have some news on the long-awaited BMW i4. This was all really supposed to be unveiled during the Geneva Motor Show, which unfortunately was canceled due to health concerns. But today, BMW has shared some details on the i4 with the unveiling of the concept i4. On the specs for the i4, BMW says, quote, the drivetrain's standout numbers include a range of up to 600 kilometers WLTP, output of up to 530 horsepower, 0 to 100 kilometers per hour, acceleration of approximately 4.0 seconds, and a top speed in excess of 200 kilometers per hour, or 124 miles per hour, end quote. So 600 kilometers is equivalent to about 373 miles, but that is on the WLTP standard. Converting that over to EPA, we're looking at maybe somewhere around 335. Those conversions are always different for each vehicle. And then of course you have to note their phrasing, which says up to 600 kilometers WLTP. I'll be pretty surprised if it ends up being over 300 miles EPA range. The other couple of noteworthy things here on the i4, the interior. The center screen is not necessarily similar to the Model 3, but design inspiration probably taken from the Model 3. Sort of a hybrid between the screen in the Model 3 and the screen in the concept for the Byton vehicles, which spans the entire width of the dash. For the i4, it starts in the center and then extends over to behind the steering wheel, so you sort of get that second screen element there. Then you've also got a panoramic glass roof on the i4 as well. The other interesting thing that I'm seeing as I'm going through these materials is the battery size. BMW actually did share this. They say, quote, the version of the battery developed for the BMW i4 impresses with its extremely slim construction and optimized energy density. It weighs roughly 550 kilograms, has an energy content of around 80 kilowatt hours, and achieves an operating range of up to 600 kilometers in the WLTP cycle, end quote. So really interesting numbers there, especially the fact that they shared the weight specifically. But if they can get 300 plus miles out of 80 kilowatt hours, I think that would be definitely a win for BMW, but unfortunately that just makes me a little bit more skeptical of that range claim. In terms of the production timeline, BMW says, quote, series production of the new BMW i4 will begin in 2021 at the BMW Group's main plant in Munich, end quote. However, they also say, quote, this means that in the future, combustion engine vehicles, plug-in hybrids, and all-electric vehicles will be manufactured on the same assembly line in Munich, end quote. This, I think, is a big downfall in BMW's strategy. This is what we discussed back in January based on some comments made by BMW's head of R&D, and that already tipped us off to this strategy. He was asked, quote, except for the full electric i3, BMW only uses flexible architectures that can accommodate internal combustion, plug-in hybrid, and battery electric powertrains. Was this the right call? End quote. And he responded, quote, a flexible architecture is the best solution for the next 5 to 10 years. But clearly, if the world turns fully electric, we will develop dedicated architectures, end quote. That answer tells you all you need to know. He is saying that if things were fully electric, it would make more sense to have dedicated architectures. This is intuitive, but in that answer, he is making the admission that flexible architectures are suboptimal for the purposes of electric vehicles. But BMW would prefer to go through this nice, smooth transition plan instead. I think we're going to find out exactly how suboptimal this is. So that'll do it for today. As always, thank you for listening. Don't forget to subscribe. Don't forget to follow me on Twitter at Tesla Podcast. And if you'd like to support the podcast, you can find those details at patreon.com/Tesla Daily Podcast. Thanks again, and I will see you tomorrow for the Wednesday, March 4th episode of Tesla Daily. Thank you.